Good evening, and welcome to another edition of African Americans Ain't Africans, the talk show that proves without a shadow of a doubt that the so called African American didn't find his way to America in the trunk of a ship. I'm your host, the Indigenous One. And tonight we're going to talk about something that we never really talk about. I mean, we can come up with everything else, but we never talk about us and currency, money. How can we never talk about ourselves in that vein or us dominating that medium, that institution? Because if everybody wants you, everybody would want what you make, what you produce with your face on it. And that's the currency. That's why in the meme I posted, it's you on the money in the 1860s. But you're taught that you're slaves, that you're something that other people are supposed to wipe their feet on their face and walk off. That's what you're taught about yourself. And as you can see from the meme, this is 1860, y'all. This is 1860s, and you're all over the money. That's not just the money, I think, on that dollar bill or that currency. It says Georgia or something, but that's all the currency down south. Why aren't you on the currency today? See, if you really want to learn something, because we try to learn on the cheap. We want everything for free. It should be getting to it. Nah. Whatever it takes, if you want to learn it, you're going to have to pay it. Whatever it is. You don't mind paying these colleges money to teach you to be a dummy. Amen. These colleges teach you to be dumb. You cool with that? You will pay $100,000 a year for that, and $100,000 a year can't help your people where you come from. Can't help the people who you came here to serve. So tonight we're gonna have the brother Ascending Mayans join us. What's going on, brother?
Peace, peace. Can you hear me?
I can hear you fine.
Perfect.
Brother, one of the things we rarely talk about, is we're always chasing other people's dollars. And one of the picture I have on the meme is on the 1860s, brother that looked like you was on the money.
Mm.
And how you talk about currency and money and gold and the cryptocurrency and all these. Share with us what you know on this currency thing and how we're used to drive that.
Got you. So currently, right now, the currency that we're utilizing is a fiat based currency, and what fiat means is that it's not connected to anything of value. And a lot of people have mistakenly called it money, but in actuality, is merely just a currency, and it's not backed by anything. The real money was what we had, which was gold and silver. And then, of course, they started to create paper currency that was always connected to that. So you had the paper currency, which was connected to gold, or you had the paper currency that was connected to silver, which meant that at any time, if you wanted to, you could go to a bank and exchange that silver certificate at the bank. You can exchange it for its weight in silver or its weight in gold. All right. And so as of now, we are operating on a system where the bankers, I call them banksters, have the ability to, in essence, print however much they want and then loan that to governments. And of course, the burden of that falls on the people because the people are taxed to pay that back. Right. But many people don't realize that it's operating in that way. So yeah, the bankers, they're loaning money that they just printed and made up out of thin air. Right. They put denominations or an amount on paper, and then they give that to the government as a loan with an interest on attached to that loan. and the people are responsible for paying back that amount of money plus the interest, right?
Wow.
You know, it's the greatest robbery of all time. And when I mean, just looking back through history, when you see some of the historical presidents like Abe Lincoln, JFK, um, Jefferson, Adams, a lot of those presidents were actually going against the bankers. They were trying to do their best, you know, and you know, it's one of those things where, you know, the lack of information and true education allowed it to creep in, and it crept in 1913, and then right after the Great Depression, once that happened, it was really game over for the U.S. Treasury, and that's where entered in the Federal Reserve. You know, that's kind of like my understanding of where we are in time pertaining to money. All right, and so my understanding right now, the only thing I look at as money is either gold and silver, or something that is equitable to money is land.
So
Other than,
those,
huh?
so those three:
Yeah,
gold, silver, and land.
yeah, because anything else is connected to the fiat currency. Now, I mean, you can get you financial securities like you know, stocks and bonds, and um, you know, what else do treasury bonds, tips, all of those things, but they're still connected to fiat that fiat money system or currency. You get what I'm saying? And so
Yes.
it still puts you at a risk, especially with what is going on right now. We see the national debt as at I mean, if you want to share your screen and you want to go to the usdebtclock.org, you can, but we see the national debt is crazy, right? And they know that all fiat currencies eventually collapse.
What is that website again? U.S. National Debt.
Just usdebtclock.org. US debtclock.org.
Oh, I'm gonna pull it up.
Yep.
So
And I kind of went over that in one of the videos that I posted, you know what I'm saying? And so you can, you know, you had a website, now you can constantly, you know, just go back and reference it. I'm gonna do a solid too, because there was one thing I didn't show on the video that I posted on that Sending Lotus page. I'm gonna show you on here so that you guys, you know, so your followers, everybody could kind of see, like, that site kind of shows something that people should be raising their eyebrow at right about now.
could
All
you
right,
could you go could you go ahead and show the audience? I have it up now, if you can see it.
cool. All right, so I'm gonna have you navigate for me.
Okay.
Now, all right, so right there you see the national debt is at 27 trillion. Okay,
27 trillion.
$27 trillion. All right, and it shows debt per citizen, right? That this
Yeah.
is U.S. debt, but they just said it's per citizen. That's how much everybody's looking at,
Right.
right? And it says
Hey,
that, huh? Go ahead.
I mean, this is the first time I looked at this, but it's like, damn, it says debt per taxpayer, $222,000.
Exactly, right? And now check this out. Everybody was asking for the stimulus. They want the stimulus, right? And what they're not realizing is stimulus is a loan. Okay. Now, granted, we need it, but here's the reason why we need it. They're trying to increase velocity, and velocity just means the amount of transactions happening because of the sickness, or, you know, stuff that's going around right now. I don't want to mess up anything, you know, with your the algorithm, so I'm not going to call it what it actually is, but we'll just say sickness.
Right.
Okay. Due to that, right, there's been a slowing in the economy, right? People haven't been going to work due to unemployment. Businesses have been shutting down, so you have, you know, transactions decreasing. Now, transactions are what actually drive the economy. That is goods and services being purchased. That is what drives the economy into an upward, trajectory. And when you don't have that and you have velocity, it means that slowing down, your economy can start to come down. All right. But because people aren't working and jobs aren't increasing pay, the Treasury realized, if we don't get money and inject money into the economy, then we're going to start going through a depression. Okay. And so the stimulus, they had to do it. And I remember Alan Greenspan speaking on it. He said that they would be willing to drop cash from the sky if they had to keep this fiat system going. And technically, that's what they're doing right now, right? Do you ever recall a time in history where the said government was giving people money?
No.
I've never experienced it in my life. I talked to my folks, my great grandparents never mentioned anything. This is new to everybody. And that's because we're reaching the climax or the end of this fiat currency system, right? And so the only way for them to keep it going in the trajectory that it's headed is for them to keep printing money and just give the money to the people. And then the people are going to spend it. That's what their hope is. But the opposite is kind of happening. So you got some people spending it, but some people looking at it like, man, this looks a little crazy. Let me go ahead and get into the stock market, or let me go ahead and throw this into crypto, or let me go ahead and stash this under the bed. It's not transactions.
Right.
Right. If you're throwing it into crypto, you're actually taking the energy that they just created, because that currency is energy, right? So you just took that and put it into a place that is not going to benefit the U.S. economy.
So what is that cryptocurrency? Because I hear a lot about it. What is it?
It's a deregulated system where people are able to they're viewing it as a new form of currency. I feel like that's the direction that people are going with it, but they don't understand currency fully to understand that it's a currency, but it's not money. Money has to be backed by something. And the way I look at crypto is, if the backing is coming from US dollars, that's not true money.
Right.
And it's predicated upon your access to the internet. That is dangerous.
Wow.
You see what I'm saying?
So if the power goes off, you screwed.
The money is in the cloud, right? If you don't have access to power, and we know that other nations like Iran and China, they censor and control the internet of its people. So who's to say that we may not find ourselves with the way that things are looking pertaining to the way that the government or the politicians do things, where they wouldn't want to regulate the internet. Right. So now, if your stuff was tied in the internet, you don't have access to your actual money.
Wow.
So to me, I don't look at that like that. And I'm not even really into crypto. I watch it, I see that it's doing big things, but I look at that as a gauge. So check it out. If they've done the stimulus, right, and people are taking their money and they're throwing it into crypto, and we've seen Bitcoin hit $48,000 per Bitcoin, what that's telling me is that some of the energy leaked out of the American economy and went into crypto. If I see that the stock market started booming at a time where I know that there was no productivity, that means that stimulus went right into the stock market. Now, an example of that is when we look at, we know that people were not at work because pretty much the system shut down for the first time, right? People had to stay at home orders, lockdown orders, and the only people who were working were the essential workers, right?
Yes.
Okay.
Yeah, I'm with you.
Okay. So if that is the case, then how do we have stocks booming, right? If we go back to the middle of last year after the stimulus, right? If it's based on productivity and things halted, we've seen the oil industry halted. People were laid off, right? Trucks were just on the road stuck because they couldn't deliver the gasoline because the gasoline that was already at the places hadn't been used up.
Right.
So the oil industry took a hit. Commodity industries took hits, right? Certain ones. But you telling me that all the producers and other companies were just booming?
Right.
That to me doesn't make sense. It's not a true it's not a true valuation. What that tells me is that there was a lot of people speculating, and that speculation, when they got their stimulus checks, ran into the markets. So it's just excess energy. The energy is going in different places. The energy is going into the Bitcoin. The energy is going into the stock market. The energy is going into the bond market. The energy is going into, all kinds of other little ways in which people can invest. Even the real estate, right? The energy is going into the real estate right now, which is overly priced, right? And now check it out. The bankers wanted to foreclose. What happened? They put out the moratorium, said that you can't that the banks could not foreclose on the people right now. So you got a whole bunch of people unemployed, bankers thirsty like wolves, ready to foreclose on people who haven't been paying their mortgages, right? People who've defaulted on loans, and you're telling me that our economy is booming, right? So what I want our viewers to understand is that don't get caught up in what looks good on the stock market, right? It's okay. It's cool. If you want to understand how to ride that wave, you can ride that wave all you want to, but understand that it is a false sense of positive or upward momentum. And it's solely happening because of the stimulus, That money is going right into those things.
Okay, we have a somebody in the chat named Truth Seeker, and
Mm-hmm.
he's saying billionaires are buying Bitcoin. They did not get a stimulus check.
Yeah. So now check it out. The billionaires didn't get stimulus checks, but if we allocate or we just go and look at how the money was crunched from the stimulus, they did, but they didn't call their stimulus. They got either grants or they got the PPP loans or they got incentives for how they report for their business. So theirs come to them in another way, and it comes to them in greater amounts, right? I feel like the American people got robbed, honestly, because let's say I think they did $7 trillion last year. Don't quote me on that. I know the projection was that they could have done $9 trillion last year. Trump didn't want to do the full 9. Now, let's say they did $7 trillion. Out of that, the American taxpayers maybe saw 600 on 1, 12, maybe 18, max $3,600 if you had a family or something like that. But out of $7 trillion, the people only saw individually between $1,200 to $3,600 or $4,800 each. It still doesn't add up. You get what I'm saying? So majority of that stimulus went to businesses, big business,
Right.
politicians, or people that they have, dealings with in other countries. Because we've seen the last stimulus, majority of that went overseas.
Right. You're right about that.
You see what I'm saying? So it's just, and I look at that stimulus as just energy, right? So this energy, and they're getting that. So now to Truth Seeker, he said that they're buying up Bitcoin. Now, what we have to understand is those billionaires understand how to play the game and how to manipulate the game, right? So when I see billionaires like Elon Musk buying Bitcoin, but talking about Dogecoin, he's playing both sides. Dogecoin is owned by him. And so when he speaks on it, it drives it up. See, these billionaires have the power to where they can speak on something, or they can signal, is what we'll call that. They can signal by dumping some of their money into these things to drive the price up. And so when people see that, they're like, "Oh man, Elon Musk is buying into Bitcoin," or "Oh man, Apple is buying into Bitcoin," or Tesla is saying that they're going to allow people to pay for their cars in Bitcoin, right? So now everybody's like, "Oh man, let me go ahead and buy into Bitcoin," and it drives the price up higher. Then they get out.
Oh,
it's the same thing that just happened, right? And that's why I made the videos I made pertaining to silver, because the same thing happened and it would have crippled the market. But JP Morgan Chase put a stop on it, right? And honestly comes into regulation. They shouldn't have been able to put the stop on it. Silver should have started its run. Now, what I want you to do is I want you to show the people real quickly. Scroll over on that screen to the right. Scroll to the right and then go take it down some so they can see all the other stuff. But I'm gonna point out something on here. I don't know if you had the ability to zoom in.
Yeah, I can get it.
All right, zoom in just a little bit. Come up just a tad bit. And it's gonna be the last column on the right. And I want to show you guys.
Hold on, let me zoom in. Damn.
Okay, yep, there you go. We're moving in. Okay, all right, I take it back all the way over to the right.
Okay, it's okay, all the way back to the right.
Yep. So you can see, man, they printing money like crazy. And this is in real time. All right. So, and remember, any loan that a person take out is money. So, when people are doing mortgage loans, cars, they fill out promissory notes. Promissory notes is fiat currency too. All right. It's all underneath the same thing. That's what's driving those numbers.
Okay. Just something that because there's a whole bunch of stuff here that we really don't pay attention to. But check out what they got living in poverty. 36 million people, man.
Mm-hmm. Without insurance, foreclosures, and that number's about to go up.
Okay, so where do you want me to go?
All right, so you already there. You see where it says dollar to gold ratio now?
Right.
You see how much that is per ounce? That's the true value of gold right now. That's the true value. If they actually allowed gold to do what it would do without manipulating the price, which they do on a regular basis, based upon the amount of currency that they're printing out and the amount of currency that is owed, right? the true value of gold is actually supposed to be valued at $34,663 per ounce. Now, I can tell you right now that they suppressed that price a hell of a lot, and it's down to I want to say last I looked, it was at like 1,800.
What?
Right. Okay. So, like I said, real money versus the fake money. They got to show what the value. Now, check it out. The dollar to gold ratio in 1913. Now, 1913 is when the Federal Reserve Act was passed. Okay. So, the last time, when before the Federal Reserve Act, when gold was actually, kind of pegged to the money, it was at $28.42 per ounce back in 1913. Now, the way that I explain this to people so they can kind of understand is this. You have 1 ounce of gold, okay? Now that's time travel back to 1913. 1 ounce of gold was worth $28.42. Now, as we move through time, that ounce of gold has not changed weight. It has not changed anything. It's still the same ounce of gold.
Right.
But now, right now, today, that same ounce of gold should be valued at $34,663. Right now, they're allowing it to show at $1,800. But still, from $28 to $1,800, still a very significant jump for something that has not changed. It didn't grow wings. It didn't add a computer component to it. It's still the same little ounce of gold. And what's that showing is the money loses value every time they print. So now you need more of that same little currency to buy this ounce of gold.
Wow.
Our currency constantly loses value every time they print. And the more they print, the faster we lose value. Now, what they'll call that is inflation. And so now it should help make sense, kind of like when people go back in time or they talk to their grandparents, like, man, back in my day, I could get, a bag of bread and a loaf of something for, 20 cents.
Right.
Now it helps make sense. Right. And we're talking about our grandparents, they probably were during a time where it's still kind of connected to silver. So it hadn't overly inflated because they were printing so much. Now look at silver. It's the dollar to silver ratio, just right above gold. You see it?
Right above gold.
Right there.
That
dollar to silver ratio. Now, hold on. You moving too high. Go back up a little bit. Go back up a little bit. Right there.
Okay, cool. Got you.
Yep. So dollar to silver ratio now. You see that? $4,813 per ounce. Okay. Now that is, like I said, the U.S. debt clock is just showing you numbers based upon printing and what was going on with the Treasury. All right. And the Federal Reserve. Now, excuse me. If we look at the dollar to silver ratio back in 1913, the same way that we looked at it for gold, it's now, back then it was $2.66 per ounce. And before that, it was a 1-to-1 ratio with the dollar. Because remember, I have a dollar. I had to dig it out, but I have a dollar, and it's called a silver certificate. And you could take that silver certificate in and get a silver dollar, which was back then it was 90% silver, right? And it was equivalent to $1, right? It was a 1-to-1 ratio. Okay. And as we see here, $2.66 back then. Now it's going to take you 4,813 Federal Reserve notes to get that same ounce. Now, but
wow.
Check it out. But they've suppressed the price. That ounce of silver is only about 27. Well, spot price is $27, but to try to get it right now, because they're experiencing shortages, you're going to probably pay around like $30 to $35. Still drastically undervalued. All right. Now here's my synopsis. I think that crypto popped up because they don't want people going right into the metals. Because technically, if crypto wasn't there right now, and people were looking at all of this crazy printing and the fact that stuff was looking real volatile, they would be going into metals. And the moment metals makes its run for real, it's game over.
So you would say metals is something that we should all be getting into?
Yeah, because that's where, I mean, it's one of those things where it'll always maintain its value. And I say that because it's a limited quantity of gold and silver. That's one thing that man cannot produce on its own. Like they can create diamonds in a lab, right? They can make money or currency with the printing press, right? They can draw in how they want the money to look, right? Press print, and it can be $100 bill, right?
Right.
Valuable, right? It's only value based upon the faith in it, right? However, gold and silver, once that's depleted, that's it. It's only a set quantity. Does that make sense? It's a set amount of weight of gold that the earth contains. And the only other way to get some is to maybe go to another planet and see if that planet has gold and find a way to hoist that stuff back to earth.
Right.
Right. Now, here, check this out. What makes it also more valuable is the fact that technology and industry uses those metals. Right. And right now, there's a halt and slow in manufacture of the Ford F-150. They paused it in certain states because they can't pay the. It's not necessarily they can't pay the workers. It's more so they can't get all of the electronics that they need for the cars because they can't get the semiconductors. They can't get the computer chips, and that's due to the shortage of silver that just happened. 2 weeks ago, there was a run on silver, and like I said, J.P. Morgan Chase made it look like they transferred 61 million ounces of silver to bring back down the stock market price of it.
So could you share with us, like the situation you just explained, how JP Morgan made it look like something? Could you tell the listeners when stuff like that happens, what do they look out for so they won't always be continually caught up in this trap? What are some of
the way to avoid that trap is you got a lot of people who invest in stocks, and so they'll buy the paper version of silver and gold, right? GLD or SLV is a way in which you can invest in gold on the stock market, and that's based upon contract. Okay, you don't actually physically own the metal, but you own a contract that's tied to the metal.
That ain't good,
right? And yeah, it's not good because there's 250 contracts per ounce of metal.
Wow.
And that should be illegal, but they do it. Right. And so what was happening was with those contracts, you have people that's doing futures betting, right? That's why I call it gambling, right? Futures. I see somebody just made a comment about buying tons of gold with the Bitcoin. And the people that's selling gold to Bitcoin, I would not be doing that right now. And they must not really understand what they have if they're doing that. It would make sense to go from Bitcoin to gold. And that's actually, if you were in Bitcoin and you had the 48 stacks, however much it is per Bitcoin, it would be smart to diversify and move it toward a hard asset like gold or silver. Silver, if you wanted to make another ride, because silver is drastically undervalued. But my bad, I kind of deviated. If we're looking at the amount of contracts, and so people are doing futures betting, and what happened about 2 weeks ago was people started making a run towards silver, and you had a lot of the big banks had made futures bets that silver would continue to underperform. But when it started jumping, it crossed the $30 threshold. That means that they had to make payments on those futures bets that weren't performing. So they were in essence kind of losing money. All right. And so at the same time, too, there was a requirement by I'm guessing one of the regulators where there's supposed to be a certain amount of silver based on the amount of contracts. So what JP Morgan Chase did was on paper, they made it look like they transferred 61 million ounces into the holder for where the metals are supposed to be. Now we know if you're going to move 61 million ounces of metals, you can't do that in just a day.
Right.
I mean, the run started happening on Sunday, and by Tuesday, 61 million ounces are transferred. That don't even sound right. You get what I'm saying? But that's why I say, if anything, people should be understanding right now how rigged the markets are. Right? If GameStop wasn't, what happened with AMC and GameStop, that should be a prime example how they froze the markets to where the average Joe could not continue to buy and sell when the big elite were taking hits. Like the game ain't safe. That's the way I'm looking at it. It's like,
so explain that to us, because a lot of, we hear it, but we're not, especially me. I'm not really, I hear it and I hear the yays and nays from both sides. But can you explain, in layman's term, what happened there?
Um, oh, what's the movie? It was a movie with Eddie Murphy, and I think it was Trading Places.
Trading Places.
Right. At the end of the movie, now they were investing in commodities. That was dealing with the commodities exchange, right?
Right.
And they were making futures bets, right? That movie is a prime example of what just happened. Except for, remember when those two brothers, the Dukes, were taking that L?
Right.
The only difference is they allowed them to take the L and they kicked them off the seat, and they got hit with a bill, right? At the end of that movie.
Right.
The same thing happened, except for all the regulators stopped the people's ability to continue buying and bailed out those Duke brothers in real life.
Oh, okay.
You get what I'm saying? Technically, they were supposed to take an L.
Right.
But the corporations like Robinhood stopped its people from being able to continue purchasing and selling, right? And that benefited the people who had bought on margin, those big corp companies they were buying information in that movie Trading Places. I forget the dude's name, but they were supposed to be getting inside information from what is that dude's name? I had just watched the movie the other day.
Beats.
Right. Beats was supposed to be coming with the briefcase with the information, right? Okay, that's what these Robinhood platforms have been doing. They've been telling the large mutual or hedge fund companies, hey, look, these people have been buying this. They're giving them the trade reports on how people are buying so that now they can invest based upon how people have been buying. You see that? And so now Robinhood hit the plug like, oh, nope, you guys can't continue to, we're putting a limit, a restriction. You can't sell, you can't do this because that's going to affect their relationship with the hedge fund, the hedge fund company, right? That hedge fund company should have been out of there. But, they got bailed out. Right. And so if people aren't able to see how this game plays right now, it's like, man, look, you're really gambling. And I mean, there's nothing wrong with it. But if that's what you want to do, at the end of the day, how can you win a game when they can change the rules at any time they want?
Wow. So at this time, what should people be doing? Because a lot of people, I'm starting to see, especially a lot of young people, 30, 35 and below, they're starting to question things. They're starting to look at things like, what something's up.
Yeah, it definitely is, man. And it's one of those things where like I said, we're at the end of the run for the fiat currency, and people are looking for alternatives. And like I said, to me, the only alternatives are going to be land, gold, and silver. Right? That's the only thing that kind of makes sense right now. That's the only thing that has value attached to it.
Right.
Bitcoin is cool, but I can't hold the Bitcoin. Right. And if I get hacked, there's no regulation. If I don't have access to the internet, let's say, the United States goes to war. And right now, there's a lot of different things happening around the United States that, most of the people aren't even aware of. A lot of countries aren't really rocking with us right now. And a lot of countries understand that the Federal Reserve note as the world currency is the ropes.
Yeah.
So we've been in trade and currency wars for a few years now, and people don't realize that. So it's like, it only makes sense right now for certain things to be held: gold and silver, land. Bitcoin is one of those things where if we do go to go to war, or if you don't have access to the internet or certain things, it's going to be difficult to be able to access your funds that are there. So what are we doing now to kind of make sure that we're at least diversified? I understand Bitcoin has had a crazy run, but like I said, that's because people are looking for what they view as alternative currencies. Okay. And they have forgotten, and most of us have never even experienced a time where gold and silver was the currency. Right. So therefore, that's not even on the radar. You get what I'm saying? So what I'm just trying to get people to understand is, hey, gold and silver was an actual currency. And when gold and silver was the currency, the United States had a production of 4% in GDP every year.
What is it now?
Well, right now it's not that, and it fluctuates. Sometimes we're doing good, sometimes we're doing bad, and that's due to volatility because of deficit spending, right? But what I'm saying is, without credit being extended in large quantities, just off of production and increased productivity, the projection of the country was on a steady incline. So we didn't need to change anything. It was the bankers wanted just to be able to print money and honestly shackle the people, because that's really what happens when you have that. Right.
Well, cool, brother. Well, listen, I want to give you much thanks for coming and sharing with us, just so we can have an insight of what's really going on with the money and how we play into it. And by the way you explained it, we really don't play with it at all, because we're always begging for it, and we don't have what it needs to create our own currency. Can you let everybody know how they want to get in contact with you if they want to learn more about this?
They can check out my YouTube channel. That's Ascending Lotus. I'm on there. I'm going to be posting a whole lot of videos pertaining to gold and silver, especially as we continue moving forward. I go into some of the details pertaining to this in one of the videos, the greatest heist of all time. You can check that out. Let's see. I also offer, other types of classes pertaining to structures that you can set up for asset protection to make sure that none of your wealth is seeping through the cracks. And the entity that I provide instruction on is trust. You guys can follow me there. Ascending Lotus. It's on the shirt here. You guys get a glimpse of it. But yep, that's where you can find me. My email is normally listed in all of the descriptions. So you guys, if you need to contact me, you want to reach out to me, you can reach out to me there or in the comments. I always reply in the comments.
Cool, brother. Well, thank you very much for joining us tonight, and thank you for sharing your information with us.
No problem, man. I appreciate you having me too.
Yes, sir. All right, so there you go, guys. Here's another brother that knows, he's in a certain lane. He knows certain things that a lot of us may not know, and maybe his information can help you get to where you're trying to get. Or like he said, he's an ascending lotus. Maybe his information can help you ascend to where you need to be. I want to thank you for joining us this Saturday night. I know you could have been doing anything, but you came and kicked it with us. I really appreciate it, and we'll see you next time. Peace.
All right. Peace, man. Anytime you need me.